Hello and welcome to Black Bear Dog Trading. It is Friday already, January 24th. The month is as good as gone. It's incredible. Anyway, we are now on phase two, and we already went over how to set up your trading as a business, how to create a trading account with the broker of your choice, and now we're going into what do you do with the profits that you withdraw from your trading account. Before I get into it, I want to take a quick moment and give a shout out to those of you who already subscribe to my channel. Even though I don't ask you to do that, I don't even ask you to comment or like, nothing at all. It shows initiative on your end that you're willing to learn and you're willing to try to improve your lives, and I think that's to be commended. So thank you very much. All right, let's continue. As I mentioned in the prior video, I take 20% applying the 10-20-70 rule. I take 20% of my profits and I invest that in specific venues. And I do that by splitting the 20% profits into 5 equal portions because I invest in 5 different things. So as an example, if I withdraw 10,000 in 1 month, after my tithing, I take 20% of the balance, which gives me $1,800. I split that in 5 equal pieces. I always use whole numbers, by the way, and that brings me to $360. That means that I will be putting in $360 in 5 different venues. And I'm going to go over this one by one. But first things first, which is we need to create an investment account. I use Fidelity.com. I have no affiliation with them at all. This is my free resource. I'm very happy with the company. I got no problem with them whatsoever. And I don't see any reason to go anywhere else. Their platform is easy to use, quick to understand, gives me everything I need, and I'm sure it will work out for you just as well. So to create an account, very simple. Open up your web browser, type in Fidelity.com. You will get this screen here. Click on open an account. Now it's important that you choose Open Now Roth IRA. And the reason we pick Roth IRA is so that all the contributions we make, the capital gains we will be getting, the dividends that are paid out to us, excuse me, as well as any interest you earn, is pretty much all tax-free. And that is what we want. So because we're paying tax on our money up front, or when we file tax returns, there is no need to pay taxes again on all the income we earn through investment. Once you click on Open Now Roth IRA, you will see this screen right here. Please confirm that you indeed are under Roth IRA. If not, go back and pick it. It will ask you, are you already a Fidelity customer? If you are, click yes. If you aren't, click no, and then click on next. If yes, it will automatically already get all your personal information. If you aren't, then please fill out all this information here, including your social security number, which is required by law that they take that from you. And when you've completed all your personal information, click on next. You will then be asked for your employment status. It's important that you select self-employed. Remember, we're going to run this as a business, even though we're a sole proprietor and you use your own personal name, you are self-employed. Then when it asks you what you do for a living, simply say, excuse me, that you're in the retail business. That's all you have to say. And after that, fill out the rest. So that's a little tidbit you need to be aware of. I posted a link in the description box below that will give you access to a video created by a lady that will walk you through the entire process, how to create a Fidelity Roth IRA account, including how to link your bank account, which, by the way, must be the business bank account that you established, and how to transfer money into your Roth IRA so that you can then start investing the money. So with this said, I highly suggest that you watch that video before you continue on to the next step. The next step is that we are now actually going to into Fidelity and log in. I've created an actual account because once you deposit some money, it takes a few days to clear. So I created an actual live account. This is not my personal private account, but it's an actual account that shows you what I have, where I invest in, and other little tidbits that you should know. So there are two things here. After you log in and you deposited some money in your Roth IRA account. Number one, it will show you that you have a retirement account, Roth IRA, and if the money has cleared, it will show you how much money you have in there at the moment. Since we haven't made any investments yet, you will see this without the profits that you've earned, and on the right side you will see how much you've contributed this year, and based on your age, your limit may be 7,500, or in my case it's 8,000. How much you have left that you can contribute during the course of 2025. So there is one thing that I would like you to do almost immediately, which is I also want you to go and create a cash management account. It is very simple to do. If you don't know how, just click in the help window under cash management, and there you go. It says open a cash management account. Click on that link, and Fidelity, while you're logged in, will just ask you just for you. Click on next, just follow the steps. With your bank account already linked to it, I suggest that you deposit some money in your cash management account, because we are going to use the cash management account to put a high yield savings account in there. Once you start trading or investing in your Roth IRA, Fidelity will automatically give you a quote unquote high yield savings account, which is called an SPAXX or SPEX, and it has a return of about 4% at present. The problem there is, while that is good, the problem there is that the SPEX is 100% taxable. So the 4% that you earn on that money is not tax free, and it kind of defeats the purpose why we're doing this in the first place. So I suggest, once you have the cash management account, deposit some funds in there. In my case here, I did $20. Wait a day or two or a few days, depending on Fidelity, that money has cleared, and then I'll show you which account to put here that is actually state and local government tax exempt. It's not federal exempt, but it's state and local government exempt, taxes exempt. So, and it pays even more than the standard SPACs, so in interest. So you actually have a little more still, being the fact that it's partially tax exempt. So I will show you how to do that once this has cleared here. Right now, this has not cleared in my account, even though it shows that I have $20 that I transferred in there. At the moment, though, it says no pending transactions, but yet when I want to trade to activate the account and I click on cash management, see, it says cash available to trade, nothing yet, because I need to wait until that completely settles. Then I can use those funds to open up the high yield savings account that I'm telling you about. By the way, at the end of this video, I am going to give you a nice nugget that you'll appreciate and you'll be pleasantly surprised with. So now that we have this established, and let's jump a few days ahead, the money has cleared in all our accounts. We now are ready to trade, and to trade is very simple. After you log in, you highlight account and trade, click on trade. What is important here, when you get that little window, you select your Roth IRA account. It will show you the amount you have available to trade, as well as settled cash. This is important here. You want to use only settled cash. If you use cash available to trade and to buy the investment, and then you want to sell part or all of that investment and you don't have settled cash, you will be in violation, and after 3 violations they will suspend or limit your account. You don't want to do that. So here we are, and the next we select the symbol, and as I said, I will show you every symbol I select, I trade, and why. So I'll go to my portfolio since I already, but this is the process. What happened here now? My internet just went down. That is not so good, right at the moment when I need it. Let's see here. That's one thing I hate about Microsoft. It constantly, okay, here we go. You heard ding dang, it reset. Every time it does an upgrade, somehow it temporarily disconnects my internet. It's a nuisance, but what can I do? So once you have, I'll show you, where was I? My positions that I am in, and I use all index funds. So again, the first time when you log in, you get the summary screen. I'll click on positions and I show you every single fund that I am in. Scroll down, here we go. I have MGV, which is a Vanguard. It's a mega cap, and let me show you what I mean with mega cap. MGV, it's right here, and it'll give us the details. It's right now at $130.93 a share, and it contains companies like JP Morgan Chase, Berkshire Hathaway, Class B, not Class A. Would be nice if it was Class A, but no, it isn't. So it has Broadcom, Exxon. It has a variety of different stocks in there, which make it more of a all around. And if you want to see exactly what's in there, click on view all 140 holdings, and here you get a whole list of everything that is in here. Colgate, Coca-Cola, Wells Fargo Bank. I mean, the list goes on and on. So you can check that out for yourself if you're interested in doing that. But this is an all-around index that covers just a little bit of everything, giving you a decent protection against possible inflation, because not all companies at the same time will lose money on the stock market. So the expense ratio for this particular index is very low. It's $7 per year. I mean, that is for every $1,000. So that is very low. And we'll go down a little further. Then you see the performance of this index fund. It's A graded, which is very good. It has an overall rating of 5 stars, which is definitely good, with an overall 10-year rating of 5 stars, which is just superb. then you can see here what the returns are, scrolling down a little bit more, compared to the Russell 1000, which is the equivalent of the MGV in 1 year, 16% over, almost 17%. 3 years was a lot less, but over the lifespan, 10 years is 10%, which is more, and over the lifespan, it's over 8%, which is more than the Russell 1000. So this is a good anti-inflationary stock to have, and that's why I picked it. If we now go back to my little pop-up screen here of the stocks that I have, the next ones, maybe I should open up another window, I can move faster. The next one I have is CGDV, and that is actually for dividend earning. So CGDV pays more dividend than it pays actual interest. So, but combined, I make pretty decent money. The stock is up right now. It's $36 something per share. The expense ratio is a little higher. It's $33 per $1,000 per year. The companies that make up this particular index are a bit of tech companies, but also a few other companies. Again, if you want to see what's included in the list, click on the link below there, and just like before, it shows you it has also McDonald's in there and Texas Instruments. So the reason I picked this stock is because of the dividend payout. So at this point in time, the stock is going relatively good. The index, it went up quite a bit. It's an A-graded index, which of course is always good. And in 1 year, it gave me 20% return, which is less than the S&P 500. But don't forget, this also pays dividends. And for the life of the stock, it's at 15%, where the S&P is at 13%. So let's see what it gives us for dividends. We scroll back to top and we click on distribution and expenses. And here we are. There you go. In addition to the interest that it's paying me, it's also given me 1.6% in dividend return. So the last dividend was paid in December, and I received 0.18 cents per share. Obviously that doesn't sound like a lot, but as you keep adding to this and you start to accrue more and more shares, so it is actually adding up. In fact, as you see here, the potential gain in percentage over the 3-year average has been 12% per year. That is on top of the interest I earn. And here you see it keeps on growing. This here is the last one where we were of the last quarter of 2024, and it just increased, you know, on an upscale. So that's why I picked CGDV. So the next one that I use is, let me see here for a quick second. I'm gonna scroll this down, make this a little easier for myself. Now I'll pop this back open. There you go. The next one I use is Forex. Forex is Fidelity's own stock that is strictly semiconductors. And the reason I use that is predominantly for the exceptional rate of return. And let me show you. I picked semiconductors while it's all technology stock. Look at the returns you get. It's a 5-star, it's a high return. The expense is just below average. Yeah, it carries a bit more risk, but look at the returns you're getting. In 10 years, almost 26%, 5 years, 30%. This year so far, 43%. I mean, it has a $65 per year per $1,000 expense, but I mean, I'm willing to spend that considering the returns that I'm getting. These are the companies, they're all semiconductors companies that are in here. And the reason I chose this is not only because of the returns, but because of the growth that this index will have over at least the next 10 years. Semiconductors are what's driving technology. Technology is rapidly vamping up at a rate that we can't keep up with it anymore. Particularly China, Europe are really pushing the envelope here with new electronic cars, flying cars, all kinds of new electronic gadgets. They all require semiconductors. Not only that, semiconductors are also used to build the massive data centers that are going to be needed to support AI, which I predict will only grow and grow. So that's the second reason why I have Forex in my portfolio. And if you look after 1 year, 43% versus the S&P 25, 3 years, 18% versus the S&P 8, the 5 years, 30% versus the S&P 14. I mean, only during the course of the life is the percentage gap not that big, but hey, I'm not knocking it. I'm extremely happy. So that's why I take the Forex as my third investment vehicle. Now, the other one that I'm using is FFRHX, which is also Fidelity, and this one is high dividend payout, FFRHX. Oops, I got it wrong. FFRHX, and this is Fidelity Index Fund, but it's a high-paying dividend fund, and it pays an average of it costs right now $9.29. It has an average 30-day yield of 7.20%. It has a 5-star rating, which is good. The returns are high. The expense is just below average. It has a midpoint in risk factor. So while the percentage is compared to Forex nowhere near what that index produces, I am very pleased with the interest that I'm making, plus, again, the dividends that it's paying out. Now, this particular index fund is brand name companies mostly. So here you see Golden Nugget, Great Outdoors, Mobilex, the list goes on. There is, how many exactly are in there? I think it says 8 right now, but it also pays a very good dividend, and I'll show you that. That is on top of, by the way, the 8% that I'm currently earning. So it has a high yearly expense of $73 per 1,000, but I don't think that is a deal breaker. So now let's see what it has for distribution or for dividend payout. As you can see here, the dividend is that I've received is, and it's paid out every month. Only last year, December, there were 2 payouts, but the dividends I received, $9, $9. Look at this. I mean, you can't beat that. That is for income generation. So that's why I have this particular, here you go, history, shows you what it's paid, and it's pretty solid in what has been paying out, in that it's pretty much always the same amount, and that is pretty good if you ask me. So this is what I have for investment funds. I also have the high yield under the cash management, but I'll make a special video about that separately. and I'll share with you why I use that. Now, I promised you that I was going to give you a nice little nugget. I just added to my investment a sixth actual stock. It's not an index fund, but it's a high-paying dividend fund that pays dividends weekly. That's right, weekly. And the reason why it's not yet showing up on my list of positions here is because I have just ordered it. I just bought it, so probably won't show up until next week. But let me show you what this stock is. It's called QDTE, and it's a high-paying dividend stock that uses covered call trading techniques in order to be able to pay the amount of dividend that they pay. Now look at this, 34% per year, or $13.91 per share per year, and they pay, as I said, weekly. Look at this. They paid on the 23rd, on the 16th, on the 8th. I mean, you want to have immediate income? Here you go. This will immediately generate income for you that is pretty decent. And over time, as you start adding more money to this, you will find that the dividends are really nice to have. And the video is getting too long now. In another video, share with you how you can set this up so that all the interest and dividend you earn becomes compounded, and now you are really on the slate of fast forward to generate financial stability in your life. Okay, this is it for now. Thanks for listening. Take care, and God bless.